Alright guys, so in this video I'll just go through the numbers, okay, the numbers and their combinations, alright? So as said, we are using Fibonacci. Okay, let me just delete this one. Okay, we're using Fibonacci and we are we're taking a look. We're looking at 127, 141, 161, 200 and 261. These are the four main numbers. Okay, and let me just show you, these are these numbers, guys. These are these numbers. These are the most important, and here's also 261. But in general, these five numbers we are looking for. Ignore these, okay? You can also remove all that, okay? So what we're looking for, again, is the alignment and congruence or confluence between the Fibonacci of the impulse leg and the Fibonacci of the retracement. So we're basically looking for these numbers, these two numbers, to align in one single area. It can be a little bit like that or like that, okay, but not in the middle or like that. The closer they are together, the better it is. The more confident you are, and the more you can risk on such a trade. For example, if these two lines are just aligned, just a pure number, okay? So right now we'll go through each number. So the first one is for the retracements, which are not so deep, and this is okay, but I personally prefer this box, okay? They're both good. Don't understand me that this is better than this one, but I like this numbers combinations because the retracement is a little bit deeper, and I'll show you that, guys. Okay, please don't worry about that. Okay, so but let's start firstly with this one. Okay, 127 Fibonacci extension and 161 Fibonacci inversion. So this is impulse leg and retracement. It's always like that: impulse leg retracement, impulse leg retracement, impulse leg retracement, impulse leg retracement. Okay, so it's always the first one is impulse leg and the retracement is the second one. So here we have, okay, let's go right here, okay, like that and like that. Okay, so here is actually a setup in front of us. So this is a strong impulse leg with obvious swing high, problems bounce fast. Even still, there was some consolidation. Still, this swing high is obvious. Not like 5 or 3, 4, 5 candles here, but it touched, boom. It consolidated a little bit. But the impulse leg is obvious. The trend is in the beginning. There was a break of this trend line, so there is a new trend. All right. So the first thing we draw is Fibonacci. Once we identify, so imagine the trade is right here, okay, like that, like imagine that price is like right here, for example, okay, or right here, okay. The first thing, so we've spotted the nice 1, 2, 3 with obvious impulse leg and a retracement and obvious swing high, swing low, obvious, swing high, obvious, swing low, obvious. Then we draw a Fibonacci extension on the impulse leg. Okay, impulse leg. Okay, you can do it like that, okay, for the sake of so that it's easier, okay, but I'll leave it like that so it will be accurate. This is the first thing. Then we take another one, and then we pay attention to these numbers: 127, 141, 161, 200, and then we simply take a Fibonacci and draw it on the retracement. All right, retracement, and leave it, okay. And as you can see, the numbers, this is Fibonacci from the impulse leg, this is retracement. And what we're looking for is the combination. And you can see here we have a 127 and 161 pretty close together, like few pips in between. All right. So some pairs, in this case, actually, let me zoom in. Oh gosh. Sorry, guys. Okay, in this case you can see this is impulse leg and retracement Fibonacci. In this case it is actually like 10 pips, but don't I mean, the reason for that is because Euro Aussie is doing a lot of pips. Okay, you can see just this movement is like 700, 800 pips. Okay, what's important, it's not, pips are not important how much, it's important how close together they are. Okay, and if they're so close like that, or this is even better, this is okay, don't bother. Okay, but if the gap is like that, okay, like that, then it's not good. Okay, it's not tradable. So what we found out is that we have the first combination, which is right here. Okay, right here. Let me just change that. Okay, and the second one is a little higher. You can see 141 and 200 pretty close together, even better. Okay, and then we have the third one is right here, but this is for me personally a little bit too far to trade. Okay, but still, if you're not sure, I mean, if you want to add a last trade also, the more weight has have the numbers from the Fibonacci, from the impulse lag. So these ones, the first one, the big ones, they have more power, they're more powerful. Please remember that. The numbers from the Fibonacci, from the impulse lag, okay, are more powerful. So rely more on them, alright? So from this observation, if you take a look at these numbers, we can see that 127 from my impulse lag and 161 from the retracement is just that. Okay, right here. Okay, this combination. The second one, 141, 200, 141 impulse lag, 200 retracement together. Okay, impulse lag, retracement together, very tight together. Perfect, good. This is our entry right here. Boom, boom. We place an order. When we see right here, we put a pending order right here. Put it. Sell limit order, sell limit, sell limit, take profit of, in this case, look, if the pair is making so much pips, look, like that, like 50 pips is okay. But make sure that for the first one, the first combinations, you are not too greedy, please. For the first pairs, take like 30 pips. For the second one, because it's more overextended, you can go for like 50 pips or even 60. Okay, in this case, the higher you go, the more pips you can take, because there's higher chance that price will return. Okay, so don't aim for the first one for the, like, I don't know, like 200 pips and price, even though like price would make, I mean, like 300 pips, even here, like for 340 pips. Okay, so but for the first take profit, for the first order, smaller, then you can add a little bit more in terms of risk and in terms of pip take profit. Okay, and the second one is this 161 and 261, which is here as well. In this case, it is not so accurate, but if the retracement would be something like that, okay, something like that, you can see they're perfectly aligned. But the 127 and 160 are not so aligned. Okay, so it depends how deep the retracement it is. And this is usually, let me just delete that. Okay, so if we take a Fibonacci retracement and we draw it another way, okay, you can see that retracement, so this is 100%, and this is, you can see here, 38.2. This is 38.2 retracement. And when you'll see such a numbers, okay, here, and here, the retracement is around 40 to 30%. Okay? And this is good, but that means there's still power in the trend, because bulls are so stronger and sells were not so stronger, were not so strong, so that there's more bullish momentum. But the deeper the retracement it is, the more healthy, I mean the more slow trend it is. Okay, if it is too deep, it is already a channel. It's like a channel trend. But if the retracement is of around 50 to 60% or a little bit more to 65%, then this is a very healthy trend. And these are the numbers, these box are the numbers when you get a retracement of around 50 to 60, somewhere in between. Okay, and we will take a look of that right now. All right, so firstly, let me find, these are both good. Okay, both these are good, but why I prefer these ones is because this trend, when the price retraces around 50 to 60%, is more healthy, natural, and predictable. This is why. Okay, and now let's take a let's find another example. Okay, so this is around 50%. Let's take a look of this. Okay, so impulse lag, retracement. Okay, we have also structure, resistance becomes support. We have 20 EMA here, it could be a 36 as well. Okay, and now we draw impulse lag and the retracement. Okay, and you can see, look at that, impulse lag 127, retracement 141, and here's a line. Okay, and you can see price just touch it and bounced. Okay, for like 500 pips. All right, so you would say, so why I wouldn't like pick like at least like to the next recent swing for like 200 pips? Come on, with such a risk this would be like 10%, 20% easily if you're a little bit more aggressive. Or if you, sometimes guys, this kind of a trend, I mean this kind of points just turn the trend and it goes forever. Okay, let me just fix that. Okay, like that. The reason is because of that. Look at that, then price can accelerate a little bit. Okay, so if the first take profit, and here's the rule, I want you to pay attention. If the first take profit is hit successfully, and then price moves quite a bit, okay, so it's not like hitting and then moving on, hitting and moving on, but when it retraces heavily, like in this case, we cancel all the orders above. Okay, not always, but usually for the sake of safety. Okay, because if the price returned here heavily, that means this was a valid swing. All the traders were already picked the orders. Okay, so that's it. So this next movement is not it's not in the breeding cycle of the previous one, of this one. Okay, so you have to redraw. For example, if there would be another one like impulse, like in a retracement, if the price would stop here, then you can redraw that, you would redraw that and trade once again, but not from this one. Okay, at least not usually. All right, so these are some of the rules, so pay attention to and go through this video a few times, guys, because it is important. All right, so, and also even these two lines, look at that here, so 141 and 161, okay, here are quite far away for my taste. Okay, for my taste. And here's also another tip, where to put a pending order if the price is like that. I personally always put it at the beginning of the first line, the first Fibonacci number, so the lowest one in this case, for buying the highest one. So I put it at the beginning of the 141, or at least in the middle. Okay, if you're sometimes confused, put it in the middle, exact middle between these two numbers, but do not put it at the highest number for the selling position, because you might not get triggered. It will happen a lot of very often, because market is really respecting these numbers, and as soon as this touches, usually prices very often just bounce heavily. Okay, so if we just pay attention to these numbers, 127, 141, you can see this is the first one. The second one, 141, 161 is the second one. I mean the first one, the second one. The third one is right here, but it is not too close, and even this one is not too close, so we would not trade that. And the last one, 200 and 100, 261 is right here as well, and we would not that trade as well. So what are these numbers? 127 and 200. It's a no, okay? That means, let me just delete all of that. For example, this happens, oh gosh, I deleted everything. Yeah. Okay. That means 127 impulse like 200 retracement. That means that the retracement was not deep enough. Pay attention. Okay. This is impulse like. Now imagine that the retracement would be like that. Okay, let me just fit into that. Okay, so here we have impulse like 127, retracement 200. You can see the retracement would be to right here only. So that would mean like it's like less than 20% of the impulse like. That means there's a lot of momentum. The trend is explosive. There's a lot of momentum, a lot of power is in it. So it is tradable, of course, yes, but it's not safe. It is not safe. So you'll see many like hints and tips how to do this strategy safe enough. Okay, and this is my main goal, main focus, to make it safe as possible. All right. So if you have like just a tiny retracement, don't trade that. Focus on this one, especially these two numbers, the first two, the first three. Okay, this you'll see these three numbers most often, and these as well, these two. Okay, and maybe this one as well. Okay, so there's a lot of things in this video, guys. I recommended you watch this video a few times. And now let's move on the next video, guys. We will deepen into that.